frankly, we need to recognise that at the time when the state sort of retracted, and at a time when the market in various ways has become dysfunctional, the family, in a really generous way, and more specifically the baby boomers, have stepped up. But they've been good parents, but not always great citizens, because it's created this huge social divide.
Hello and welcome to the IFS Zooms In. I'm Paul Johnson, Director of the Institute for Fiscal Studies. And this week we're going to look at one of the biggest and most important trends of recent years, certainly in my view, and that has been the growing importance of wealth, its concentration among a particular generation, the baby boomers. We all know about that. Older people on average are much, much wealthier than younger people. They've done well in the housing market, they've done well in the pension system, and they are the best off generation that we've ever had. Put that together with stagnant earnings growth, which means that younger people have done much less well, and the result is that many Gen Z, millennials, are increasingly dependent on their parents, especially when it comes to house purchase, but it goes beyond that. So this week, we're going to look at how wealth passes down and across generations, its impact on social mobility, and its impact on life chances. And you'll discover why one of my key pieces of advice to young people is to choose your parents well. So to do all of that, I'm really delighted to be joined by Eliza Filby, who's the best-selling author of a great book called Inheritocracy, and David Sturrock, who is an associate director here at the Institute for Fiscal Studies, who's not yet a best-selling author, but I'm sure will.
Those journal articles, they're flying off the shelves at some point.
Let's start with you, Eliza. Great title for your book, Inheritocracy. Can you tell us what you mean by inheritocracy and what drove you to write about it?
Firstly, it was a deliberately provocative title, and obviously a play on meritocracy. And I wanted to understand why I was that conscientious girl that worked really hard, was the first person in my family to get a degree, took that way too far and got a PhD, went to university and never left.
That was your mistake.
I know, that was my massive error in life. Actually, all of that hard work, having entered the workforce in 2008, wasn't really paying off, wasn't really materializing in the way that I'd been told it would. And that became very apparent to me when I couldn't actually afford to live in the area I grew up. I grew up in Tooting, South London. And one of the reasons why that became especially apparent was that my parents had been incredibly savvy when it came to buying property. And in the 1980s, my mum, with her sister, had bought, in addition to our own family home, a 5-bedroom house in Tooting for £28,000. I'll say that again, a 5-bedroom house in Tooting for £28,000. And I ended up having to basically, very fortunate in this, obviously, crash there in my 20s and early 30s and rely on my mum and dad. That was the safety net and springboard in my 20s and 30s, rather than my education and all those efforts. And I just was like, what's the story here? Because essentially my generation, and I was born in 1981, so I'm a really old millennial, right? And this is, I think, becomes ever more true the further you go down, frankly, the millennial timeframe and now Gen Z, is that we're living in an economy where wages have stalled, and we were told, get to university and there will be a return on that investment. Actually, the truth was the cost of that degree went up and the value of that degree has gone down. So suddenly we have entered an economy that is more in an inheritocracy, very much dependent on your access to parental wealth, parental safety net, parental springboard.
Choose your parents well.
Right, exactly. Not just in terms of an inheritance, but critically, not even just in terms of gift for a deposit for a house, but support with childcare, perhaps cohabitation, perhaps, support and help with mortgage, cost of living crisis. There's multiple ways the bank of mum and dad now plays a role in young people's lives. So what is this? An inheritocracy. And the way I define it is It's not what you're earning anymore because wages have stalled. It's not what you're learning anymore because the degree on that return on that investment of that education has stalled and is now slightly declining. It's whether you have access to the bank of mum and dad is the key social divide. And I wanted to tell that story in its entirety, in its fullness. So it's not just about housing, because that's the conversation that we navigate towards when we talk about this issue. It's not just a London thing, because that's, again, where we navigate to. It's not just about rich middle class kids who have gone to a Russell Group university or better, because it's dividing the middle classes in very different, interesting ways. And it's having a huge impact on relationships, friendship groups, elder care, childcare. And really, frankly, we need to recognize that at the time when the state sort of retracted, and at a time when the market in various ways has become dysfunctional, the family, in a really generous way, and more specifically the baby boomers, have stepped up. But they've been good parents, but not always great citizens, because it's created this huge social divide. And that was my personal reason for writing the book, but fundamentally also opening up the conversation that we need to have about the role the bank of mum and dad plays in our economy.
Well, I think we probably ought to own up to where we fit into this generational divide. Eliza said that she's an old millennial. I'm an old Gen Xer. I'm not actually a boomer. I think I need to make that very clear, particularly to my own children.
Explicit about that one, Paul.
Not to blame for anything, of course.
Absolutely. You've opened up a whole range of issues there, Eliza, which we definitely want to discuss. But David, this issue of the scale of inheritance and the scale of reliance on parents and how that's changed over time. Can you? Yeah. You've been working on this for quite some time now and written some nearly best-selling pieces on this. Can you just tell us a little bit about how that manifests itself and how much younger generations now are more dependent on inheritance?
What's kind of fascinating for me about all of this is that you see these massive global economic trends in terms of wealth and house prices and how that's all driven by the aging of the population and so on. But it filters all the way down to the very individual level that Eliza talks about in her book. So maybe I can just paint a bit of a picture of what that big trend is that and what's kind of driving, I think, a lot of these concerns. And so if you looked back over a 100-year horizon, for much of the 20th century, you're actually seeing increasing social mobility. So where you end up in life was less and less determined by your parental background, how wealthy your parents were, how educated they were, how high income they were. But then in the last 40 or 50 years or so, we've seen a reversal of some of those trends in social mobility. And a really, I think, key part of that, and I think what is kind of the nub of when we're talking about inheritocracy, is the fact that wealth has grown much faster than earned incomes since about the early 1980s, and that's happened across the world. And so what that means, we've seen about a doubling of the value of the stock of wealth, of kind of financial assets and housing and everything, compared to what we produce and have as our incomes.
So wealth is twice as important relative to income as it was about 30 years ago.
That's right, thereabouts. And what that means, of course, that wealth gets passed down when people die. But not only when people die. I like to think that there's kind of two big moments of wealth transfer during life. There's those inheritances at death, but there's the perhaps more consequential period when people are in their 20s and early 30s, where they might get some financial gifts or maybe help in other ways from their parents. What we're seeing is that flow becomes much larger compared to people's incomes from work. And so if we kind of project that forward over the lifetimes of the people who are alive at the moment, then we think that while if you were born in the 1960s, then something like 8% of your lifetime income on average might have come in the form of inherited wealth. That's going to double, be more like 15 to 20%.
And those are averages, of course. Within each generation, that 8% will be made up of a few big numbers and a lot of small numbers.
Exactly. And so, wealth, it's very unequally distributed. A lot of people have hardly any, and a lot is held by a select few. And so if you look at, say, people born in the 1980s, then the top quarter can expect to inherit something around £350,000 or more, whereas there's going to be maybe about a fifth who are inheriting essentially nothing because their parents will just not have any wealth to their name throughout their lives, and so they won't be passing anything on. Wealth gets more important, but therefore the differences in wealth become more important too.
Yeah. And Eliza, that really...
Yeah, I think that brilliantly explains the central tension here. One of the things that I wanted to address in the book was that David Willits, in his book, The Pinch, really, laid out the sort of generational windfall that the boomers had, right? They'd had three things that their millennial kids have struggled to gain, and now Gen Z struggled to gain. That's good wages for some, not all, obviously rising wages, particularly for professionals, decent pensions, as we know, and thirdly, accessible, affordable housing, right? All those three things have become increasingly difficult for the millennial generation and Gen Z. And we've prioritized, for good or ill, whether we like it or not, this is a fact, wealth over wage. And now we have basically anyone under the age of 45, you are more likely to gain access to a home through being loyal to your parents rather than being loyal to your boss. And when you explain that to millennials and Gen Z and explain the kind of economic conditions in which they've, entered adulthood, they suddenly, I think, a light goes on in their heads. One of the things that I've been really sort of alerted to when publishing this book is a lot of people going, I get it now. I internalize that failure. Unable to find a partner, unable to leave home before I'm 30, unable to buy a house in London, unable to build in a career in a sector that I wanted to. They internalize that failure, but now they've understood, and I think this is what I wanted to essentially do with the book, is opening up the conversation around family privilege and actually moving away from boomers versus millennials, which is the Willits kind of very important argument. Actually, what really has happened since, I think, 2008 is that boomers have been incredibly generous. They've trickled that wealth down to their kids. And so it's not been necessarily boomers versus millennials or old versus young. It's actually those that have the bank of mum and dad and those that do not. And actually, there are varying ways in which that financial privilege works within a family. If your parents are still together and they're still an economic unit, that can be a huge privilege over, a slightly more wealthier family whose parents are not still together. So, there's all sorts of mitigating factors in this dynamic of an inheritocracy. But I think it's really important to understand that we need to start talking about not just inheritance and that great wealth transfer, but the way in which family privilege and, yes, the lottery of birth is really determining opportunity for young people in this country.
And that's what you mean when you talk about that generation being good parents but bad citizens, because the consequence of it being kept within the family is that you stultify social mobility. And of course, people certainly don't like paying wealth taxes or inheritance taxes or anything like that, but they're happy to give it to their own kids for absolutely understandable reasons. And I've got 4 sons in their 20s, and I unfortunately not still with their mother, and therefore they're going to get a lot less than they might otherwise have done. But exactly as you say.
I think the point is, I think the really critical thing, that the subtitle of the book is It's Time to Talk About the Bank of Mum and Dad, because I think we're really bad at talking about it. And one of the things that I uncovered in some data polling that I did in the book was the people most likely to believe that we lived in an inheritocracy were high wage earners and male living in London, but still dependent in some form on the bank of mum and dad. So the myth of the self-made man is still very much prevalent in society, which is why I think we're very bad at talking about the bank of mum and dad. But people are very bad at talking about it, not just to nosy people researching a book on the subject like me, but actually really bad at talking about it within their friendship groups and critically with their parents. I mean, the amount of people I interviewed in the book who said, I don't know how much is there. I can't really talk to my parents about inheritance, but I was lucky to receive money when they were able to offer it. And actually that's massively problematic because you're basically creating a real sort of can of worms when your parents do pass away eventually. I just think we need to be much more open about this issue, politically, within families, and socially as well.
No, I think that's really important. And I mean, the housing thing, I think people are all generally fairly well aware of this collapse in owner occupation among younger people as house prices have gone up. Although that's sort of slightly at the moment moving in the other direction. I mean, the really big changes happened before about 2012, but still we've got owner occupation rates not much more than half what they were 30 years ago among people in their 20s and 30s, which is just astonishing after this long-term increase. But David, I mean, the two other things that Eliza mentioned are really important. One is the pensions, the baby boomers, and I'm afraid I missed out on this, ended up with much more generous pensions, defined benefit pensions, which are no longer available.
Yeah.
And the second aspect is that earnings basically haven't risen in real terms for almost 20 years.
Yeah, I mean, so there's a lot of factors which come together to mean that it's a lot harder to accumulate wealth as a working age person today than maybe 30 or 40 years ago. So at that point, you were much more likely to have your employer promise to give you some pension that would be, maybe 2/3 or half of your final salary. Those turned out to be a lot more expensive to provide than was thought, and so they've collapsed away. And now instead, you're saving into a pension pot, which, as well as not probably having as generous a kind of contribution from your employer, is also, you're subject to a lot more risk as the individual having to accumulate that wealth. And as you say, that's at the same time, another big shift is that where there was this kind of rising tide through the 80s and 90s and early 2000s in terms of wage growth, with each generation earning, I think, around, sort of 20-25% more than people 10 years before them. No, that's no longer the case. So you can understand why, when you're faced with this situation, you're thinking, what's the way in which I'm going to move up the wealth distribution as a young person? Then, in contrast to a few decades ago, it's a lot harder to do that kind of from your own means or from a rising economic tide. And instead, you're going to be looking to perhaps a much bigger pot of wealth held by your parents, or not, as the case may be.
And that's why that makes that so important. And because there's more wealth around, you need to save more to move up the wealth ladder.
That's right. There's sort of a very particular interaction then, because, okay, earnings become less important and wealth becomes more important, but there's certain groups and certain types of people who are much less likely to have that access to that parental wealth. So if you are a young person from Black Caribbean background, then it's about a 50% chance your parents are homeowners versus closer to high 70s or early 80% if you're a white young person. And so there are just some groups that are much less likely to get those big wealth transfers. If you grew up in, say, the northeast of England, your parents are not going to have a house that's...
Makes it really hard. You might want a job in London where it pays well and you've got sort of prospects and so on, but it's really difficult to move to London because everything's so expensive in terms of not just buying a house, but even renting.
I think you're absolutely right. I think it also is really, we've always had inheritance, right? We've always had family wealth trickling down. But when it becomes the main opportunity for success and progress and social mobility, then it becomes a huge problem. And I think one of the things that I found fascinating when writing the book, I was very conscious that I was writing a lot about the middle class, and particularly a frustrated section of the middle class who perhaps were the first person in their family to go to university, but were able to enter a professional sector, but had found that actually those opportunities hadn't materialized in the way they thought they had. And I'll take my own example in this. As I said, if you look at my sort of situation, I again was the first person, as I said, to get a degree in my family. My dad was a painter decorator and then a cleaner. And in a sense, by all sort of cultural markers, I came from a working class household. And yet that is all irrelevant, because the most important thing about my identity and my family, frankly, is that my parents were homeowners. My grandfather had won a house in a card game, and
wow.
yeah, I know. So they were homeowners by accident. But then critically, my mum co-bought a house with her sister that appreciated in value hugely. My mother didn't sort of benefit from that home buying sort of that purchase. I was the person that really saw that windfall, because I basically was able to live in London rent free throughout my 20s and early 30s.
You lucky person.
Well, I think the critical thing here is all that baby boomer wealth. We talk about the baby boomers having all this opportunity. Actually, the windfall is really being seen in their kids. And I think that's partly because they've just been amazing savers. But I think it's also because, that wealth is materializing and being sort of released also in their children, because it's so difficult to get on any kind of stable ladder and path and progress. So I'd say what's interesting is firstly how this is disrupting the middle class, right? Particularly graduates, and creating a divide within the middle class between those that have the bank of mum and dad and those that don't. And also it's creating a huge stalling of the working class and lower income groups, right? Because unless there's very little. I spoke to Alan Milburn, who's obviously very, very clued up on this issue, and social mobility is his real thing. But he was saying, it's so much less likely now that a cleaner working in a business can make their way up through that organization, or someone starting on the shop floor can make their way up in an organization, because of the way in which so much is now dominated by graduates. The workplace is so dominated by graduates, but it's also because just social mobility has stalled, and work doesn't buy us and afford us the same opportunities that it did our parents. So there's a real stalling of working class aspiration because of all of this, as well as the frustrations of within the middle class.
And of course, those two things work together, because the people who are the graduates are in general the children of people who are homeowners and better off. So they're not that they've got the advantage in the labour market, and they've got the advantage of the inheritance, and that creates the bigger problem of social mobility
and marriage. It used to be that graduates married graduates. Increasingly, you're getting one beneficiary of the bank of mum and dad marrying another beneficiary in the of the bank of mum and dad, and the merging of banks and mums and dads.
We economists have a wonderful term for that: assortative mating.
Assortative mating, but it used to be only driven by education. It's now increasingly driven by wealth, which all sounds very echoing of, the novels of Jane Austen.
Doesn't it just? It really is all about going out and finding the right. That's more useful advice. Don't worry about your parents.
If you don't
find the right
partner.
Yeah. or possibly take Eliza's advice and go play poker. I mean, that seems to be
where can I play?
Seems to be the way, potentially the way forward. We've been talking about all of this so far as if it were sort of something just came, just came out of space. This just happened to us. But of course, there are, we're in an economy with a lot of government activity, a lot of government policy, Bank of England policy, and so on. And I think one of the problems with that policy, as far as I can see it over the last certainly 20 years, is that it's actually acted to exacerbate this issue rather than to make it better. We've had incredibly low interest rates. We've had quantitative easing. We've had triple lock of the state pension. We've had the demise of occupational pension schemes. We've got that completely insane way of taxing housing. I've kind of said it, David, but just agree with me.
Yeah, and you could go back further, I suppose, and you could say things maybe kicked off with right to buy and also privatization, moving a lot of wealth into private hands in the first place. That then went up a lot in value. And so, yeah, I think there's a kind of outstanding question about this way of managing the macroeconomy, which was a consensus for quite a while about using interest rates, but we seem to have got into a kind of a situation where we kind of we've had these low interest rates for a long time, and they've increased recently, but still, we're in the grand scheme of things, a relatively low long-term interest rates, and some people think interest rates could go back down again. Is that really the best sort of tool to be using when it has potentially all these other kind of side effects in terms of inequalities via its effect on asset prices, which I don't think people had really predicted, certainly not predicted the degree of that before it happened. So I think that's one sort of question I guess you might be wanting to get onto. Well, what should we be doing instead, or what should policy be doing to help with this?
Yeah, but let's come on to that. But I want to ask Eliza a little bit about the politics of this. And again, going back to your wonderful phrase about being good parents but bad citizens, because, of course, we know that the older generation are more likely to vote. We know that political parties are not willing to upset them. Nobody likes inheritance tax, which you might think is the obvious way of dealing with this. I mean, to what extent do you see this as a political problem?
Well, I mean, it's a hugely political issue. Not least, and obviously the Conservative administration was completely hamstrung by its need for baby boomers' votes and to keep them happy, and frankly also spending. I feel like the boomers dragged us out of the 2008 crisis with their sports cars and buy-to-let residences. But I think also there is a critical issue here, which is the amount of money that is now transferring down the generations means that inheritance is not an old people's issue anymore. It's actually people of my generation going, hang on a minute, hang on, you're going to tax their pensions as well as, properties. Oh gosh, okay, this is going to really affect me. So I think that it's becoming more than just keep the boomers happy. We need to gather their votes and maintain their votes. I think the Bank of Mum and Dad is now such a critical financial institution in our country that to tamper with it, to disrupt it, will have huge, not just political consequences, but economic ones. Whether we're talking about housing, whether we're talking about, any part of the economy, holidays, for example, the number of multi-generational holidays that are paid for by now the bank of grandma and granddad is huge, phenomenal. So I think it's just recognizing actually how important and ingrained this is within the economy actually makes you realize the true political nature of this is much broader than I think even just that sort of let's keep the boomers happy, which I think was the conversation happening from 2010 onwards. I think what I'm sensing is the disillusionment felt by young people, both that have the Bank of Mum and Dad and those that do not. Because let's not assume that being economically infantilized by your parents is an okay situation. It's not. It's actually deeply complicated to be basically reliant and dependent on your parents well into your 30s. It's actually infantilizing, and as I write in the book, has created a power dynamic in most families that people find deeply uncomfortable. So I think we need to be thinking about the ways in which it's not just disadvantageous for those that don't have this springboard and support system of their parental wealth. It's also deeply troubling for those that do. And actually, it's also storing up a huge problem around social care and the social care bill that is looming, and the government definitely doesn't want to confront. No government has confronted it and has kicked that can down the road for a good 20 years. How much of this money that is going to millennial kids and Gen Z kids actually should be going to, or should be saved for the inevitable social care bill that's coming? And when I interviewed people about this issue, one of the things that a lot of baby boomers were saying to me is, I just want to see that my kids are okay, and I don't want the state to take my house. And so that there's a sort of head in the sand attitude around social care. But, I would argue that social care crisis is a young people's problem. And it's one that we're not being encouraged to talk about by politicians. So I think all of this is much deeper than we need to build more houses, or we need to slap more an increase on inheritance tax. When I interviewed you, Paul, for the book, you brilliantly said the phrase, we need to make inheritance matter less. And I think that's the approach. It's not that we're, saying inheritance is a bad thing. I would say in many instances, it's a good thing. It stems from love. It stems from success. But it's also about making it matter less. And I think one of the critical things we need to do is pull certain levers in the economy to get people to sort of create more opportunity for young people, prioritize wages over wealth, and reflect that in the tax system, but also encourage baby boomers to move. I mean, one report said that 51% of baby boomers in this country has 2 spare bedrooms, which are filled at Christmas. Brilliant. But can we incentivize the baby boomers to move and really shake up the housing market that way, and encourage that downsizing and a greater movement in the housing market? It's not all about building more houses. I think we oversimplify the issue in so many levels in that respect.
Well, of course, we explicitly disincentivize people from moving through the tax system by charging whacking great amounts of stamp duty, particularly on more expensive houses that the baby boomers might be moving in and out of, and by having a council tax system which is regressive. So if you buy a cheaper property, pay more council tax as a fraction of the value of the property. So, we do exactly the opposite of what you're describing there. But David, I'm on tenterhooks. You were going to offer us the solution.
Maybe as to sort of preface what I'm going to say, I think perhaps another reason why policy action in this space is particularly difficult comes from kind of, you can see if you contrast thinking about income mobility and these wealth issues. 'Cause I think a lot of government focus in social mobility, with good reason, is around kind of improving educational outcomes for disadvantaged students and those from disadvantaged backgrounds. And that is a very worthwhile aim. If you think about what you can do in the education and the income space, improving outcomes for disadvantaged people doesn't necessarily come at the cost of outcomes for more advantaged people. That doesn't have to be the case with wealth, but it is to a greater extent the case, because ultimately the amount of housing we have is kind of fixed over the short run. And so really what we're talking about is shifting the distribution of that, who lives where. And there's things, we can do things like getting rid of stamp duty and replacing it such that we're kind of making better use of the housing. But if you really are thinking about, making big inroads into the inequalities in outcomes that are driven by differences in wealth, then you're really, I think, talking about redistribution of resources, which can come through, the inheritance tax system or in other ways. And that's just a lot more difficult because it means telling people that you're going to take things away from them. So I think that is one reason why these kind of inequalities are perhaps politically more difficult to address. But how could you go about doing something in this space? The word inheritocracy might kind of prompt, first of all, thinking about inheritance tax. And in some ways, that's the right way to maybe think about things, but in a lot of ways, it's maybe also not going to be, certainly not going to be the silver bullet or a kind of comprehensive way of approaching this issue.
Yeah, I think you've done some work which shows that even if you had an effective inheritance tax, a higher rate, that the impact on the amount of money moving down the generation not that big.
Yeah, so just at the moment, our inheritance tax system touches a small fraction of inheritances, and so unless you really drastically expanded that system such that it affected a lot more people, then it's just not making that much of a difference. At the moment, we think that the inheritance tax system might reduce the inequalities of wealth transfers between the richest fifth and the poorest fifth by maybe a tenth. So 90% of that inequality is not being touched. And the government can do things and has done things to kind of improve the way that tax is set up. But what it did in the last budget was admirable reform in a lot of ways.
You talk about pensions and farmers.
Yeah, bringing, let's not getting into the details, but in broad terms, I think we would say it's good to have an inheritance tax that applies broadly across different types of wealth, doesn't allow you to kind of avoid it by holding certain types of assets. But there, we're really talking about quite small amounts,
and it's created an awful lot of unhappiness.
A lot of unhappiness.
Why are we not taxing wealth in a more draconian way we're taxing wage? I mean, why can't we have a sort of, some sort of decrease in a massive tax cut for the under 40s, for example, on their wages? Have age-specific tax cuts that directed at those that live predominantly on wages.
I think, even without
getting unrealistic.
Just even thinking about tax changes that have been made recently and kind of what might be kind of, on the table in terms of things the government tends to tinker with is the classic things like, is it income tax or national insurance that you reach for? Income tax applies on all different types of income, including pension income, national insurance, just on earnings. These are the sorts of choices, I think, along with others perhaps, that are going to make a difference to kind of the burden of taxation across different generations.
And strikingly, this government has chosen its one big tax increase to be only on earnings.
Yeah.
So the increase in national insurance contributions leaves pensioners completely untouched and leaves workers worse off.
Yeah.
And I think also it's important to recognise how this bank of mum and dad is evolving, because it is evolving with Gen X now. Gen X are now the new bank of mum and dad.
Don't I know?
Boomers, a lot of the right, okay, and a lot of boomers are now the bank of grandma and granddad. Investing in pensions for Gen Alphas. Paying the VAT increase on private school fees. This isn't a fixed dynamic. It's evolving, and I've spoken to a lot and interviewed a lot of Gen Xers, those in their 50s and 60s, who are sandwiched between potentially seeing and looking after elderly parents at the through the social care system and looking after kids at university, which, university rents have gone up nearly 20% since the pandemic. The cost of tertiary education, as we know, is extraordinary. Certain universities are no-go universities for those that don't have the bank of mum and dad. And what that's doing is it's transforming how Gen X are thinking about their own retirement plans and their own sort of later years. And so you may be also seeing very different problems coming, storing up, because the generation of boomers have been the bank of mum and dad. Now you've got Gen X who are frankly not as rich and don't have as good a pensions as the boomers. So I think we need to think of this in real time and see how, looking at the data, how that's evolving. As your report on the hotel of the bank of mum and dad shows, it's not just now parents just giving deposits for first-time buyers. The living within the family home, cohabitation well into your 20s and early 30s with your parents is a growing trend.
Yeah.
And not just a London trend as well, which is really important.
Yeah.
Well, I like that. Sympathy for us poor old Gen Xers.
You're forgotten generation.
We are a forgotten generation, and as you say, we're having to look after our kids without all this wealth.
And there's no, and the great indicator of this is the amount of parents trying to get their kids on degree apprenticeships. earn while you learn. The degree apprenticeships, the good ones, are now harder to get into than Oxbridge. You've seen a massive decline in working class people getting on degree apprenticeships and a massive increase in middle class people getting it. And it's pushed by the parents, because the parents are going, I don't want to take out what feels like another mortgage to get you through university and for you to even, still come out with loads of debt. So I think the conversation around education, tertiary education in particular, and how it relates to this dynamic between parents and their kids, and how they're investing in their kids, is hugely problematic. And the disillusion you're seeing amongst young people around getting a degree and the value of that degree, but also the parents, the disillusionment around the higher education system, again, is a massive, massive problem.
Let me tell you a little story about myself, which really fits that very well, at least my kids. I've got 4 sons in their 20s, as I said. 3 of them went to university and one didn't. He did an apprenticeship, not a degree apprenticeship, but an apprenticeship straight out of school. And he, at 25, has just had a house offer accepted on a house in London. Now, how's he done that? Well, partly it's the hotel of mum and dad. He he had about 4 years of earning as an apprentice, paying no rent. It's partly that was during COVID, so he had a couple of years of spending nothing and saving all of his earnings. It's partly because he did an apprenticeship. He's got no student loan, because he's now got 7 years of work experience. He's on a decent salary. I mean, not silly. I mean, nowhere near 6 figures, but he's on a decent salary, and he's got a little bit of help, actually quite a little bit of help from mum and dad. So put those together, and he's actually looking to buy in London. And it's because parents were in London that he was able to get a job in London, which pays more than it would have done anywhere else. His 3 brothers, one older than him who went to university, did very well, is nowhere near to buy a house. And his 2 younger ones who are still at university are still just draining my coffers every month.
I think that points to a really important point here, is that, and I tried to flesh this out in the book, there are people that are subverting the inheritocracy. And I went in search of them, right? And they were very keen.
The inheritocracy, we like that.
Very keen to talk to me. And by and large, they fell into a couple of different groups. Number one was people that had studied STEM subjects and had good jobs outside of London, or lived outside of London. So didn't have the cost of living in the capital, but had effectively London wages. Number 2 was the groups who had amazing employers. So I spoke to one guy in Hartlepool who worked for an engineering company, and he didn't go to university. He went straight onto a really good apprenticeship. The employer was amazing. He had a share option. They saved effectively through his employee share scheme a deposit for a house, bought a house, and then the employer paid for him to get a degree. And now he's earning over 6 figures and incredibly successful, living in the Northeast. So that was a consequence of a really good employer investing in their employees. And the third, I would say, was a more kind of classic tale of social mobility, of someone who had gone, first gen to go to university, but had not moved to London, but had managed to get a good job, and been incredibly savvy. So I'm thinking of one particular guy from Newcastle who worked for one of the big 4 accountancy firms, was actually funding and supporting his parents rather than money going the other way around. And he just basically not spent any of his wages. And he was about to buy his first home. And he said to me, he said, I know I've been savvy. I know I've done all the right things. He said, but why do I feel like I'm basically in a system that is completely rigged? And so even though he was quote unquote successful, he felt that the system was completely rigged against him. And I think there are sort of really important meritocrats success stories, increasingly 1st and 2nd generation immigrants, actually. But I think we need to really accept that even though you are successful and able to subvert the inheritocracy, you are perhaps more aware of it and more frustrated by it nonetheless.
Well, the subversion of the inheritocracy might be a good place to stop, but I just want to end with one final question or thought, which is, I guess the thing that worries me is that once this has started to happen, as wealth begets wealth, and as Eliza was saying, rich people marry rich people, and social mobility is reduced, it feels like this is something which, without really serious action, will not stop, but may actually just gather pace because wealth becomes more concentrated. It moves down the generations and becomes more concentrated. Is that something that is my intuition on that right?
That's a theory that some economists have put forward and said, well, that's kind of the Thomas Piketty thesis. So this idea that left to its own devices, the capitalist economy will just lead to increased concentration of wealth down some dynasties. He and others say that the way that has not happened in the past is only with big disruptions like world wars. Whether that is what we need to disrupt this, I don't know, ultimately. There are maybe some... whether there can be something less dramatic. Some people would say, well, we've come through this period of big falls in interest rates, increases in house prices and other asset values. That's maybe going to reverse a bit. So maybe that would sort of take the edge off this process. But I don't think anyone thinks it's going to completely go back to where we were before this big build-up.
And getting growth and getting earnings growing is going to be absolutely vital, isn't it?
I think it's a gathering storm. This is the greatest transference of wealth in history, and we're not unique here. This is happening in all different parts of the world. And so you've got this transference of wealth, which is already trickling, not to millennials, but to Gen Alpha. And so Gen Alpha are also a generation that has low birth rates. Now, we know that public money is dominated by demographics, and you saw it with the boomers. When the boomers were young, a lot of money went into education. Now they're old, a lot of money is going into pensions, pensioner support. So Gen Alpha, who don't have the bank of mum and dad or the bank of grandma and dad, will suffer even more because there's such low birth rate. So we're already seeing, or likely to see, between 2025 and 2028, approximately around 10% decline in numbers on the school rolls, for example. Closures of primary schools. So it's a combination of the great wealth transfer, demographics, and low growth. And a complex education system, which is frankly sink or swim, and no sort of options or routes for those that don't succeed in that system. Sending more and more people to university has been a net benefit for all concerned and society as a whole, I would argue. But it has created a sink or swim culture in which many, many have been left behind. And in the age of AI, that is only going to intensify. And as much as I want to see green shoots and feel optimistic for the world that my children will inhabit, frankly, I don't see us changing this situation anytime soon unless there's serious political upheaval.
The government is talking about some of the right things. Building more houses should be perhaps good for growth in some areas and bring down house prices, make some areas more accessible. They're trying to get growth going. These things are hard. They take a long time. And I think having big impact on the trends that we're talking about is certainly not a 5-year project, but it's much, much longer than that.
Well, before we started this podcast, Eliza was telling us how she was struggling and she thought succeeding to be optimistic. But I'm not sure you're succeeding that well, Eliza. But I think that on that cheery note, I think we will have to bring this fascinating conversation to an end, and remind listeners, actually, on the very last point that Eliza was talking about on demographics. We had a fantastic episode of the IFS Zooms In not long ago with Melinda Mills from the University of Oxford, with a brilliant conversation about what is happening to demography. But that's a great conversation. Eliza, David, thank you. I think it is clear that the world we live in now is changing dramatically relative to the one I grew up in. Inheritance is much more important. Your parents are much more important. And it's gradually becoming more like maybe a century ago when those things were so much more important to people. Maybe even further back, the novels, as you said, Eliza, of Jane Austen and the need to find a partner with 5,000 a year or whatever. The Bennet sisters were told to do 10,000 a year. Yes. I think you have to multiply that by about 50 to get to current day terms. So they weren't they weren't going to settle for anything less than a lot. Anyway, I'll stop wibbling on about English literature, about which I know almost nothing. So I'll end the episode before I lose all of you listeners. Thank you very much to David and Eliza again, and thank you for listening to this episode of the IFS Zooms In. To see more of our work, please visit www.ifs.org.uk, and to further support us, please do consider becoming a member for as little as £10 a month. You can find out more in the episode description. We'll see you next time.